on the way to the gym. Just thought I'd throw y'all some quick game. So yes, you can right now today get a mortgage of 3% or 2.68%. And here's how. You can do something called a mortgage assumption. Now, what is a mortgage assumption? I'm gonna just keep it simple. A mortgage assumption is when you are stepping into the shoes of someone else's mortgage, okay? Now, there are only certain loans that are considered assumable, and those are the government-backed loans. So, for example, FHA, VA, USDA, those style loans are the only ones that are for the most part, assumable. Now, how do you get into, or how do you do a mortgage assumption? It's a very similar process to buying a home. You would still have to qualify for that particular home. And of course, the current owner of the home, and the person that's currently on the mortgage would have to agree to you being the person that is assuming the mortgage. This can be an option for some people that want to get into a home without paying a higher interest rate. And this can also help some people. So for example, if somebody that just bought during the pandemic, you know, they may have lost their job, they may be going into foreclosure, they may be about to do a short sale. And instead of doing that, they can have somebody assume the mortgage. This is something that I'm starting to see in some of these homes that are being listed is, you know, hey, instead of, you know, paying a high interest rate for the home, just assume the mortgage. And, you know, you can go through it that way. You know, there are a lot of savvy agents that are doing this. This is a very savvy way to help somebody get out of, you know, a home that they, you know, they might not be able to afford. I know you're going to ask, or I know people are going to ask, well, what about the person's equity? So let's just say somebody has, you know, equity in their home and you are going to, or you want to assume the mortgage. You are going to have to put the cash down or, you know, give them pretty much the cash for their remaining equity. Now, the other thing you can do is take out a second position or a second lien, a second loan against the home, which will be at today's interest rates in order to give them that equity. Okay. Now, you know, that's that side of assuming a mortgage. But I just wanted to just throw this at you all because this is actually an option that you can use when purchasing a home. There's nothing wrong with, you know, either yourself or your agent asking the seller, like, hey, you know, I've seen, you know, this house has been on the market for a while. You know, what kind of loan or mortgage do they have? And would they, you know, what's their interest rate? Would they be interested in doing a mortgage assumption instead of a traditional sale? You know, so that can, you know, be in your favor as the buyer because you'll get in, you know, at a low interest rate. When you assume a mortgage, you don't actually, the mortgage doesn't reset. So let's just say they've owned the home for 1 year. Okay. They've paid 1 year mortgage payments. So when you assume the mortgage, you don't have a 30-year. You're technically picking up on year 29. So you have 29 years left in that mortgage. And the same can be for if they've owned it for 15 years and you assume the mortgage. Well, you have 15 years left to pay on that mortgage. So these are just creative ways for you to get into a home or to, you know, help yourself get into a great interest rate. As you can see right now, the interest rates, you know, are in close to 7, right under 7. They've actually come down some. Now, I don't know if we'll ever get back to 2.6 or, you know, 3% in, you know, in the next year or so. But this is just a creative way for you to be able to get into a home for a very good rate. Now, the only negative to that, or well, one negative thing to that is if you're assuming a mortgage that somebody got, let's just say last year or the year before, you may not have equity. Okay, because a lot of people that got these homes for these cheap rates bought at the top of the market. So you will be assuming, although you have a lower interest rate, you will be assuming the mortgage at a higher price. Okay. So I just want to just leave that with you all. And I hope this is something that can help somebody. You know, if you're a real estate agent or if you're a buyer in the market and you haven't thought about this, hopefully this can help you get into a great situation. Thanks for watching.